With many cryptos continuing to make higher highs, there is a perception that people are holding on for dear life, otherwise known as hodling, their coins. But new data from leading crypto payment processor Coin Payments shows that this might no longer be the case.
I got to get your broad view first. It's been such a remarkable week, at least on Wall Street, when it comes to crypto, because it seems like every day a new investment firm, this week it was Morgan Stanley and B of A, are trying to make an institutional call on where it fits in a diversified portfolio. What's your overall view?
Why are you guys doing this? Is this some sort of a Bitcoin promo stunt, or are you guys true believers in crypto?
The only real reason to own Bitcoin is speculation, chasing higher prices. It's higher today, trading above $58,000.
Bitcoin is seeing a lot more pushback on its carbon footprint.
Houses listed in Miami and Los Angeles will accept Bitcoin offers from prospective buyers. Phil Lavelle with our partners at Newsy breaks down how the digital currency could change the housing market.
Since the first quarter of 2019, Coin Payments is tracking a 300% growth in payment transactions using crypto in North America alone.
Yeah, well, that's exactly right. That's been the story of the last year, is institutions finding crypto, finding Bitcoin specifically.
Well, we've had so many of our fans reach out and be interested in actually paying with Bitcoin, whether it's tickets or potentially even sponsors. And so we thought this was a good way to test the market to see if there really was the interest level.
So the question is, people may own it for speculative purposes, but at what point does the train ride end, if you will, if that's the case, right?
And that's causing a dilemma for some fund managers. On the one hand, crypto has seen a lot of price upside, but they also need to weigh demand for some more environmentally friendly investments.
It's a pretty huge house and a pretty penny for this place in sunny SoCal.
$3.2 million.
And we're not just talking normal dollars here, the kind we all know.
Does this surprise you?
No, it doesn't. Because when platforms like PayPal last year allow people to buy a fraction, and according to Metcalfe's law, this was a big part of the boom.
You know, in my view, all of this, whether we're talking about startup valuations, whether we're talking about SPACs, whether we're talking about Bitcoin, cryptocurrency broadly, NFTs specifically, which I know you've covered extensively on the show over the last couple of weeks, it's all a part of this broader trend of having so much capital in the system.
And so, what would a luxury suite, I don't know if you're allowed to say this on the air, Dave, what would a luxury suite normally cost? I'm trying to figure it out versus one Bitcoin and how much you're kind of potentially losing money or maybe making money if Bitcoin soars.
Right. Well, look, I think at the end of the day, Andrew, this is about supply and demand. We know the supply of Bitcoin is capped at 21 million coins. The supply growth rate of Bitcoin is halving every 4 years. So there's less and less Bitcoin coming in. So ultimately, it's exactly what you said, is when does the demand for the cryptocurrency stop growing? And ultimately, that's a question of adoption.
To create new Bitcoin, it takes an energy-intensive process called mining. So you can't do this on a laptop. It's done through high-powered computers. An estimated 65% of global mining is coming from China, and about a third comes from the coal-burning region of Xinjiang. That's an area in northern China. Analysts tell me that the energy it takes to mine Bitcoin has gone up with demand this year. And according to estimates from Digiconomist, Bitcoin's CO2 footprint is now bigger than entire countries. That includes Chile, Austria, and Bangladesh. Bill Gates is among those warning about the impact. Bank of America warned about it this week in a note to clients. And one analyst from BCA predicts that the energy issue could cause Bitcoin to, quote, lose most of its value over time.
But also a volatile replacement, the kind that you can't even touch.
It's also for sale for Bitcoin.
Yep, made famous by hackers and the dark web.
Bitcoin has a terrible problem with scammers.
Now sending investors into a spin with its swings. The volatile and confusing cryptocurrency.
It's sort of hard to handle unless you really know what you're doing with it.
Supply of Bitcoin dropped last year, but production, it was called the halving. And then PayPal comes along and you can open your account and you can buy.
It's all about investors reaching for return further and further out the risk spectrum. And And you're seeing institutions respond to that, and I think rightfully so. And that goes for treasuries, that goes for investment management firms, that goes for the big Wall Street banks.
Yeah, it's usually $64,000 for a full season suite for a whole year. And so the current price of Bitcoin, I think it's around $57,000. So it's at a little bit of a discount if you just paid with one Bitcoin.
Okay, but I think the question that we should be asking here is, let's say it's a speculative instrument. And by the way, I think it's almost impossible to say right now that it isn't. But if you believe that it is some form of digital gold, it sounds to me like your view is that the current folks who have money in Bitcoin won't actually hold it when it gets to some kind of steady state that feels a little bit more like gold, because you'll think to yourself, I don't have a 10x opportunity going on in the future, therefore then I sell, therefore it pushes the stock down. I'm asking you, at what price does that happen?
Institutional investors have been cited as a key driver of Bitcoin's 100% rally this year. Any drop-off in that demand could weigh on prices. The crypto industry, though, argues that a lot of this Bitcoin mining uses excess energy. Jack Dorsey is among those who have predicted that Bitcoin will eventually be powered completely by clean energy.
Even Bitcoin ATMs springing up to buy the stuff, a national rollout, companies like CoinCloud cashing in.
There's a lot of people using it. We've had over 250,000 customers use our machines. We've got 1,600 locations nationwide, and that's grown, over the last 7 years organically.
So people can turn around and use that. Now my Bitcoin's gone up dramatically. I can buy something else with it.
When someone like a B of A comes out and says it's too volatile to be a store of value, it's too volatile to be, at least at this stage, an efficient means of payment, does that bother you, or do you actually believe they are still legitimately do you believe crypto is still ironing out very large kinks here?
But it did crest 60. So you're getting a little bit of a Bitcoin discount these days. So, that's, I think, why we've had a lot of interest, over 100 inquiries, lots of folks signing up. And I think we'll probably have a transaction here today or tomorrow, the first one go.
Well, I think it's impossible to tell. But one thing I'd say about prices in Bitcoin is that, remember, in 2017, 2018, we had a big run-up in prices that was led largely by retail investors flowing in. This time around, there's been a lot more institutional investors coming through into the market. And we also know there's a lot of hedge funds in this trade. So I think if the hedge funds somehow smell that there is downside risk, they're all going to try to get out. And the other thing that we observed from Bitcoin in our report is that it's driven by liquidity.
But the future of home buying, really?
In my opinion, it kind of is. It's really interesting. I know there's kind of an end here with Bitcoin at some point and earning it or whatnot, but there's a real, need or want or excitement about it.
So, Kate, let me ask you the question that hangs in the air about this. What about investing in companies that buy Bitcoin and hold them on their balance sheet, like Dorsey Square, MicroStrategy, Tesla? Could Bitcoin investments then make it such that those funds that have ESG sort of goals can't go there?
Absolutely, crypto is still ironing out very large kinks, but you have to look at it in context and look at what you're comparing it to.
Is it just one suite, or like if people see this like, oh man, I love the A's and I got a bunch of Bitcoin, let's do it?
To the upside. And that's something unusual. Most asset classes, Andrew, when there's more liquidity, prices stabilize. In the case of Bitcoin, there's more liquidity and prices go up.
That's right. It certainly muddies the water. Analysts that I've been talking to this week say companies that are otherwise pure play ESG investments, if you think of Tesla, clean energy there, Square scores very high on diversity and ESG. Their Bitcoin exposure might make fund managers think twice, but there's also no legal distinction. So it is very subjective. It's up to the fund managers. But it certainly complicates it. In that Bank of America note out this week, they also mentioned that it's not just environmental. They talk about some of the negatives that regulators have also worried about, including money laundering and other illicit activity.
Which is really interesting, so I think that it's going to be going for a little bit longer.
But wait a second, you might be watching this thinking, how on earth does this all work? I don't understand Bitcoin, and trust me, you're not going to be on your own. So allow me.
Yes, we still have kind of the haters of Bank of America coming out and saying that. But if you look at the number of institutions who were skeptics 3 years ago relative to today, that number has declined dramatically. And that's a result of the infrastructure growing in maturity. You were just talking about a second ago Visa and some of the kinks that Visa is still ironing out, whether that's in terms of high fees. Yes, there are high fees in Bitcoin and Ethereum as well, but a lot of that hand-wringing, I think, is very misplaced.
Yeah, we've set aside 10 suites for this, so we have the ability to sell up to 10. And so we're hoping to see, we'd love to sell all 10 if possible. And we have between now and April 1st to actually do the transaction. And, like I said, we've been hearing from a lot of our fans that they're interested in paying with cryptocurrency. And I think if you see this in baseball, you could see it anywhere in a mainstream location. So it's an important point in seeing if this is a real way to transact in the marketplace.
That's kind of a very, very peculiar
What do you think the downside risk is? At $58,000, since I'm struggling to get you to give me an upper end of this, what's your lower end of this?
Well, I mean, the reason I can't do that is because we don't really have price targets in our report, so we haven't really kind of come down to that. But
because if you look at the trajectory of the technology and you look at the problems that it's solving, it actually, even today, stacks up very well relative to the legacy system. I don't know when the last time you tried to do a bank transfer to Zambia was. I tried to do one a couple weeks ago, and let me tell you, I was very tempted to call up my counterparty and ask them if they could just accept Bitcoin instead, because it would have been an easier process.
Bitcoin is an attempt to make a decentralized currency that's electronic. For the purpose of buying things, think of it as a commodity that you can buy or sell for a given price in dollars. And if you're making a large purchase, you can use it as a substitute currency if the buyer will accept it. It's not very good at being money, but people can and do use it a bit like money.
I'm tempted to ask you why you were transferring funds to Zambia, but I won't. Feel free
for another day.
Yeah,
for
another day, perhaps.
A donation.
I've been surprised. Good. I've been surprised over the past, say, 5 years how little success there's been in blockchain startups, like in the mainstream. And it struck me over the past week that part of what this NFT thing has done is get the mainstream, not just investor, but person on the street talking about the applicability of blockchain beyond Bitcoin, beyond Ethereum. And that's exactly what Metakoven, who bought this Beeple piece, was going for it.
Bitcoin's value has swung wildly this last month, worth $45,000 per coin 1 week, more than $60,000 a few weeks later. There is return and risk.
Wasn't just because of the value of the piece, it's part of this move by crypto capitalists to expand what we think blockchain can do, right?
That's exactly right. And what's really cool to me is for the first time, we're seeing people using this technology, whether it's on the artist side who are creating the NFTs, whether it's on the consumer side, people are using this technology without realizing what it is.
So the currency of the future starting to sell the houses of today. This just one of a handful of homes across the country testing these waters. An extra option, even if lots of us don't quite understand it.
I loved that you had Beeple on the show. I've spent a lot of time talking to musical artists, other artists who are coming in and making use of this technology. And again, just like I was saying about Bitcoin relative to the financial system, artists are flocking to this because they can see the existing system of how they get treated, of how they are intermediated, of how they do not accrue the value that they're creating for the world is broken for them. And they want something different.